love me. Tell me pretty lies, look me in the face. Tell me that you love me, even if it's fake.
In this video we will see top 23 rules followed by William J. O'Neill, a great investor and author. So let's start.
Don't buy cheap stocks. Buy Nasdaq stocks mainly selling between $15 and $300 a share and NYSE stocks from $20 to $300 a share. Avoid the junk pile. Buy growth stocks that show each of the last 3 years' annual earnings per share up at least 25% and the next year's consensus earnings estimate up 25% or more. Most growth stocks should also have annual cash flow of 20%. Make sure the last 2 or 3 quarters' earnings per share are up a huge amount. Look for a minimum of 25% to 30%. In bull markets, look for EPS up 40% to 500%, the higher, the better. See that each of the last 3 quarters' sales are accelerating in their percentage increases, or the last quarter's sales are up at least 25%. Buy stocks with a return on equity of 17% or more. The best companies will show a return on equity of 25% to 50%. Make sure the recent quarterly after-tax profit margins are improving and near the stock's peak after-tax margins. Most stocks should be in the top 5 or 6 broad industry sectors. Don't buy a stock because of its dividend or PE ratio. Buy it because it's the number 1 company in its particular field in terms of earnings and sales growth, ROE, profit margins, and product superiority. Buy stocks with relative strength of 85 or higher. Any size capitalization will do, but the majority of your stocks should trade an average daily volume of several 100,000 shares or more. Learn to read charts and recognize proper bases and exact buy points. Use daily and weekly charts to materially improve your stock selection and timing. Buy stocks they initially break out of sound and proper bases with volume for the day 50% or more above normal trading volume. Carefully average up, not down, and cut every single loss when it is 7% or 8% below your purchase price with absolutely no exception. Write out your sell rules that show when you will sell and nail down a profit in your stock. Make sure your stock has at least 1 or 2 better performing mutual funds who have bought it in the last reporting period. You want your stocks to have increasing institutional sponsorship over the last several quarters. The company should have an excellent new product or service that is selling well. It should also have a big market for its product and the opportunity for repeat sales. The general market should be in an uptrend and either favoring small or big cap companies. The stock should have ownership by top management. Look for a new America entrepreneurial company rather than laggard, old America companies. Forget your pride and ego. The market doesn't know or care what you think. No matter how smart you think you are, the market is always smarter. A high IQ and a master's degree are not guarantees of market success. Your ego could cost you a lot of money. Don't argue with the market, and never try to prove you're right and the market is wrong. Watch for companies that have recently announced they are buying back 5% to 10% or more of their common stock. Find out if there is new management in the company and where it came from. Don't try to buy a stock at the bottom or on the way down in price, and don't average down. If you buy at $40, don't buy more if it goes to $35 or $30. If the new appear to be bad but the market yawns, you can feel more positive. The tape is telling you that the underlying market may be stronger than many believe. On the other hand, if highly positive news hits the market and stocks give ground, Slightly, the tape analyst might conclude the underpinnings of the market are weaker than previously believed. 37% of a stock's price movement is directly tied to the performance of the industry group the stock is in. Another 12% is due to strength in its overall sector. Therefore, half of a stock's move is due to the strength of its respective group.
Thanks for watching our video.